A huge rally on the local market today to make up for 4 straight days of losses. It finished up 2.1%, but it's still down 3% for the week, making it the worst week since March 2020. All sectors were higher today: miners, banks, even Myer, after 3% of the company was bought this morning. The buyer is rumoured to be its jilted lover Solomon Lew, who's had several attempts at taking control of a department store. Perhaps he's back for another go. Global share markets saw another rough week as concerns about central banks raising rates and Russian-Ukraine tensions weighed. Overnight, US markets saw a big dip before mostly recovering, while today Asian markets were mixed. The thing that markets can really bet on rising now, aside from interest rates, is volatility. Here is the US-based Volatility or Fear Index. After releasing skyrocketing consumer inflation data on Tuesday, today the ABS released business inflation figures. And unsurprisingly, it's up sharply. While consumer prices climbed 3.5% in the December quarter, business prices rose 3.7%. Now, the rise was largely driven by record high construction costs. Thanks to government fueling demand and rising freight and shortages, things like timber's up 15%, paint is up 6%. The hot inflation puts pressure on the RBA to lift the cash rate. But banks are already hiking their mortgage rates, and borrowers are responding. After a huge switch to fixed rates while banks were offering 2% for 3 or 4 years, new borrowers are now opting for variable rates. And why wouldn't they? The number of variable loans under 2% are rising, while fixed loans under 2% are becoming pretty scarce. That's finance.